Awesome. Okay. All right. Welcome, folks. Thank you very much for joining us. My name is Pat Gage, and I am the host of the Real Estate Mastermind, Commercial Real Estate Investing Mastermind. Goodness gracious, get the name right. We meet every other Wednesday at 7 p.m. and we bring in special guests, mastermind people that are going to push us over the top, right, to give us that, that edge. And I think you're going to be really, really excited about what Mike's got to say tonight because he's got some experience that most of us don't have, and that's really going to help us here. So, and also if you want to join upcoming events, just go to our website, opportunitycreator.com, which is above my head here, and then /Zoom mastermind links and get signed up for the next one. I do have to say we did change our procedures. If you weren't here, we are having passcodes because we were Zoom bombed a couple of weeks in a row. So I do apologize for the increased security, but I have to do that to protect our network here. But the mission of this group is basically to get you to get your first deal. Get enough information, get enough people networking in this area. I encourage you to put your information in the chat box. My information is in the chat box right now. You can take a look at how we can format it there, but go ahead and do that and start connecting with people that are in this group. And that's where you're going to find partners. That's where you're going to find money. That's where you're going to find deals possibly. And that's what my whole goal of this is to open it up and seeing that we're, in a different world right now with a pandemic, but also we're meeting people around the country that, normally you wouldn't meet, right? So take time to put your information in the chat because obviously it's going to be important. And then we'll get on to our guests. And our guest tonight is Mike Morawski. He has 30 years in experience in real estate investment. He has controlled over 285 million in real estate transaction. Mike is an entrepreneur, an author, real estate trainer, public speaker, and personal coach with a strong personal resilience and a deep desire to help others live an extraordinary life. And that's the one thing I love about your bio, Mike. I didn't tell you that the other night when we saw each other. I love that. He has coached hundreds of real estate investors to fulfill their dreams. Michael began his career as a general contractor in Chicago. He got that business to about $5 million in revenue and he sold it. And he said, hey, what's next, right? I sold my company. Now what am I going to do? So from there, he entered the real estate industry as a sales agent. We began building a team of agents and support staff that produced over 20 million per year in sales. In 2005, Mike started a private equity firm. He raised $18 million in private equity. He acquired 60 million in multifamily apartments, including 4,000 units in 5 different U.S. cities. So I think he's got a few things for us to dig into. But with that, I'll turn it over to Mike. He kind of finish out his intro, and then we'll get down to it.
Thanks, Pat. I appreciate it. And I put all my contact information in the chat. I saw other people were doing that. So I love what you said, though, about getting people to do a deal. And I think that's so important. There's so many training programs out there and so many masterminds and things like that. But when the mission is around helping other people be successful, I think that's really important. And that's a key thing. So I really love that about what you're doing.
Thank you.
Yeah, but like you said, I've been in the real estate space for about 30 years. Started out as a sales agent. And I've always lived by the philosophy that success leaves clues. And that if you follow other successful people, whether their success was positive or they had some losses, you can learn from that and you can grow from that. And I've had a lot of both. I've had great success. I've had a lot of loss. And I think that the mistakes that I've made are enough to educate people. So when I first went into real estate, I sought out a very successful real estate agent in my market and went to him and said, hey, I'm thinking about going into business. I had just come out of the construction business, had a company that I burned out. I was still banging nails and didn't want to be doing that anymore. And as Pat alluded to, I was really successful in the marketplace. I sold the company and took a year off. And during that year, my wife and I at the time, we house hacked a couple of houses and This was long before it was sexy, right? Today everybody's doing it. Today it's fun.
Yeah.
Right? Back then she was screaming at me about the nails laying on the floor. So, but I met a real estate agent along the way who I thought, man, what this guy's doing, if I could go do that or duplicate part of what he's doing, I could do really well. So I went to him and said, hey, I'm thinking about going in the real estate business. He said, well, I think you should. I think you have some great qualities about you. And I asked him, I said, well, could I shadow you? And he said, no. He said, I'm going to do one better, and I'm going to date myself here, Pat. But he said, I'll make you a cassette tape. And I kind of equate that to being a podcast today, right? Because you could go back and listen to that over and over. And that's what I did. I listened to that cassette tape over and over and over again. I went in the business, and in my first 9 months in the real estate business, I sold 78 houses. I was RE/MAX Rookie of the Year that year, and then went on to build a team selling. We were selling over 100, 125 houses a year. Did that consecutively for 7 or 8 years. Saw the market in 2005 starting to shift. And I wasn't exactly sure what was going to happen, but I knew that there was going to be some implosion. And I want you to take heed today, because I see shades today in the marketplace of 2006, 2007. And I think this is a time in our environment that we need to be cautious as investors.
Yeah.
That we need to walk cautiously. Now, I'm not telling you don't go do a deal, because you should go do a deal. Because in a high market, a low market, a robust market, a not so good market, you can make money. But just be cautious, be conservative in underwriting and things like that. And I'll talk about that. But so I watched this market starting to soften, and I knew I was going to have to do something else. I had 5 or 6 people working for me, and I knew that I was going to have to lay people off unless I did something different. And I hate always being the bearer of bad news, right? Yeah. So I decided to go in the apartment business. And it wasn't that I just woke up one morning and decided to go in the apartment business. It was something that I had watched for a period of time. I'm in a marketplace. There's a couple of big syndicators. You may have heard of Inland Real Estate or heard of Sam Zell. They're both here in Chicago, and I watched them. And I understood the model, right? The private equity model. You can raise private equity from individuals, people you know, people you don't know, marry it with a great real estate deal, stay in the middle, and as long as everything goes well, everybody makes money, provided everything goes well.
Yeah.
So over the next 30 months, I raised $18 million. I bought $60 million worth of real estate. It was 4,000 apartments in 5 different states. Built a property management company managing 7,500 doors. Now, I tell you that because what I did was I grew way too fast. I was very unstable in my growth. In 2007, we closed 17 transactions for 2,700 units, and I barely had time to breathe. So we didn't pay attention, to what was going on in the details, and just very unstable. I was over leveraged. I was 85% loan to value on $60 million worth of real estate, which is just ludicrous. The bank should have stopped me a long time ago. It's like, I always look at it like the guy sitting at the bar at 2:00 in the morning. They should take his car keys away from him, right?
Yeah.
The
bartender just keeps serving them.
Yeah. They should have taken the lending limits away from me a long time before that.
Yeah.
And then I was undercapitalized. I didn't raise enough money from investors. And then one of the big mistakes I made was I took a provision out of my PPM or my offering documents that said that I could go back to my investors for a capital call if there was an issue. But I thought, hey, the market is just growing at such a high rate, and it's so fast that I would never need to go back and ask for capital because we have enough capital that's going to perpetuate from the growth of the market. Well, that didn't happen. So 2008 comes around. It's like hitting a wall. You want me to keep going, Pat?
Oh, yeah. No. You're
okay.
Good. You're good.
Yeah, I didn't know if you wanted to ask any questions but I'll keep going.
I'm writing them down so I can hit you up later.
Okay. So 2008 comes around, and it's like hitting a brick wall in a freight train at 200 miles an hour. The whole world starts to come off the rails. And during that time, like I said, we were very unstable, but our occupancy dropped so drastically in our apartments across the board that we weren't able to pay bills anymore. So what happened was I had been, I'd seen a couple recessions in the past and be part of those. And my thought process was, hey, a recession lasts 17 or 18 months, but and there's a 10 to 12% correction in the market. Well, this thing lasted 7 or 8 years, and it was a 40% correction. And it was hard to mitigate that storm. Mm-hmm. I had some deals. I had 38 different companies, actually, and I had some that I should have just let go to foreclosure, and some investors get hurt. And we could have nursed the other deals and done okay.
So but now let me start. I will ask you a question here. The 38 companies, was that 38 apartment complexes that you had?
Yeah, it was 35 apartment complexes, then a construction company and a property management company. And
okay. So you should have sliced off, hey, these 10 aren't doing good. You
right.
tried to save everything, hoping that, it would come back like a lot of people did during that time. I lived through that time too. So,
right.
Okay. Interesting.
Yeah, exactly. So, I took, I should have let 10 deals go to foreclosure. I should have just given the keys back to the bank and been done with them. Or back to the investors that were involved. But, I'm the kind of guy, I hate being the bearer of bad news. Not anymore, because I'll tell you now, but I hate being the guy that has to come to you and say, hey, the market shifted. We have a problem. There's an issue. We need capital. We don't have enough capital. But we were really heavily vested in in markets that back the car industry. Now, I don't mean like Detroit. What I mean is the little markets that made knobs for radios, dashboard parts, springs for seats.
Suppliers. Okay.
Right. The suppliers for the car industry. I was in a town in Indiana called Anderson, Indiana, and they basically rolled the sidewalks up in Anderson, Indiana. 45% of the businesses closed down. I had a property manager on that site call me on a Monday morning in tears one day, 7:30 in the morning, and she's crying. And I'm like, Mary, what's wrong? And she goes, I have 45 moving trucks in the parking lot this morning.
Oh my God.
And I don't have a scheduled move out for 30 days. I'm like, God, how do you even mitigate this? Right. So I drive down there and, there was just nothing we could do, but that's the type of thing that happened in a lot of the properties that we owned. And that was a 285 unit apartment complex. So that was a big chunk of people that moved out of there.
I guess what could you have done differently? Was it the location? Was it the industries? Because it seems like that's 285. It wasn't out in the middle of nowhere. So it has a pretty I know Anderson's. That's one of the markets I'm targeting. So it's a pretty good sized market.
Yeah.
What do you think you could have done differently?
When we bought in that market, Pat, Anderson was the number 3 city in the country, according to Money Magazine, to raise your family in.
Wow.
It was on that list, right? We were like, man, this is great. We're 5 miles from the new racetrack. I don't even know if they finished building that or opened that there, but we were in a great location just outside of downtown. We had some commercial property on the front that we were rezoning, and we were going to sell the corner to Wendy's, and it was a great deal, right? And the market just turned upside down, and everything stopped. That town that was number 3 in the country to raise your family in dropped to like number 5 from the bottom of the list of 275 cities.
It was practically probably overnight too, wasn't it? Because obviously the autos, they shut down and they're done.
It was in 30 days because the auto industry closed down, and then the transportation industry closed down. DHL and FedEx just were like, what are we going to do? And in those markets, that was Cincinnati. Right. So that was all the stuff we owned in Cincinnati. Excuse me. So, it was like the perfect storm. Right. And, to answer your question there, there was not really anything we could do. The one thing that we could have done was I could have been more loan to value. Right. I could have been 65 to 70% LTV, and I could have raised more capital and had more capital in the bank. But even that we wouldn't have weathered the storm for as long as it needed to be weathered. It just wouldn't have happened.
Gotcha. Because you were leveraged, what'd you say, 80, 85%?
Yeah, 85%. And,
So it wasn't like you forcing, the banks were giving you that money. So,
right,
I guess a caveat or a nugget there is, yeah, just because they offer you 80, 90% doesn't mean you need to take it, right?
Well,
I mean, because the bank's going to say, well, you took it. We want our property. We want our payment.
yeah. It's like I'm doing a deal right now, and my partner says, hey, I think we can do a 70% or 70% LTV on this. And I said, whoa. I said, we don't even want to go there right now. I said, that's the kind of stuff that got me in trouble before, or he said 80% because we're trying to do it. The numbers work good, being conservative at 75% LTV, said that the bank will give us 80%. It helps our cash on cash. Yeah. I said, it just doesn't make sense at this level. So fast forward a little bit, we have this dilemma and I try to save my company. So I always tell people, I say, look, I never flew private. I didn't buy a boat. I didn't upgrade my house. I didn't buy a big fancy car. I drove a car with 285,000 miles on it. I tried to build my business and I imploded. And I tried to save the company. So what I did was I started to move money from my profitable companies' cash flow to non-profitable companies. And I started moving money back and forth. Now I did it at the guidance of my attorney and my accountant. They both said, hey, Pat, I think somebody wants to get in. They did it at the guidance of, my attorney, who said, as long as there's a paper trail, you can go ahead and let people,
do that.
You can do that. Well, I didn't disclose it to my investors, and in there lies the problem. So the problem was that because I didn't disclose it to my investors, I got in trouble. I ultimately was charged with a count of wire fraud and mail fraud, and I got sentenced to 10 years in federal prison as a result of it.
Wow.
So you want me to keep going?
Yeah, go right ahead. I mean, that's one, I'm shocked, but there's a lessons learned in that, right?
Yeah.
Yes, you rely on people to tell you, good information. And obviously, they guided you wrong, but you always got to, again, going back to the bank thing too, always ask, a couple more people. Interesting.
Yeah. So, there's a couple of things that happen along the way that we may get into that detail, but my life got turned upside down. I was like, I wind up going to federal prison. I served 7.5 years and then came home and served another 10 months on home confinement. But here's the points I want you to take away from this. One is that I grew way too fast. Mm-hmm. So especially in today's environment, make sure that you're being cautious and you're watching everything, right? Underwrite conservatively. Check it, double check it, call somebody with a little bit more experience, have them look at it, but underwrite conservatively. Make sure that you're not pushing rent growth higher than you can. Make sure that you're not spending too much money on CapEx. Make sure that you come up with a good forward-looking vision on your exit cap. There's a lot of metrics in there that you need to pay attention to.
Now, what do you think, real quick question, I don't mean to stop you, but like conservatively, everybody says that. Can you give us some kind of rules of thumb in your experience? Because obviously 30 years in experience, what would you say, let's say for, cash on, or I should not cash on, for a borrowing of money, give us some ideas of those ranges that you're looking or telling your students to stay in to help them.
So on the lending side, make sure you're 65 to 75% LTV on a deal. Okay. So make sure you're raising enough money if you're syndicating the deal. Make sure you got some money in reserves and sitting in the bank. One of the things about rent growth, right? So when I go into a market and I look at rent growth, I want to make sure that if I'm going to put X amount of dollars in capital improvements in kitchens and baths and, exterior and interior improvements, that I'm going to see a 15% or greater return on my renovation dollars. So I want to see that come back through on my rent increase. Now, what that looks like is, can I justify a $50, a $75, $100 increase in my year one rent after I do that renovation?
Okay.
And what can I justify beyond that? So I'm going to give you a couple examples. I live in Chicago. Nationally, the rent growth is 3.9%. Chicago and the collar counties around Chicago, it's 1.7%. For me, Chicago as a market doesn't make sense. There's a lot of people that love this area, that they invest in here, but for me, it doesn't make sense. I want to be in a high rent growth market. So I'm heavily vested today in Florida. The other markets I would look at would be the three big markets or four big markets in Texas: your Dallas, your Houston, your San Antonio, Charlotte, Atlanta, and Phoenix. Those are the markets because it's a heavy migration in those markets, right? You got people that are coming from the north going to the south. The baby boomers are just, really impacting those markets. So, and I believe we still have 6 years of that, because you have 10,000 people a day turning 65 for the next 6 years yet, right?
Yeah.
So if you've ever read those economic books, and I'm not an economist, but I listen to these guys and I study this stuff because it helps our business, right? So when I go to a Florida, like I'm doing a deal in Tampa right now, and I know that Tampa, Sarasota, that South Central market is about a 7% annual rent growth. Now, 7%, the national is 3.9. That market's 7%. Why would you not want to be in that market, right? Whether you're a passive investor or an active investor.
Now, when you go to that market and you see it's 7%, now, when you do your underwriting, are you taking like half of that?
Yeah, I'm somewhere between 4 and 5%, depending on
to that leave that cushion in there.
Right,
yeah.
Right.
Okay.
Yeah, because I won't take it all. You can't take it all, and then you got to look at the cap rate, right? So cap rates are continuing to compress right now, and I think that in those markets I've mentioned, we're going to see almost a 3% cap rate, if not. And I know some of the products I've actually looked at already are at 3%. And
wow.
I think that we're going to see that happen a lot across the board with your upper B class and your A class product. Your other products will probably still stay around the 4 or 5-ish. But listen, I got a buddy who's they're invested in 25,000 units right now. And he said that in the last 4 years, he hasn't seen anything that makes any sense north of a 5%. So,
wow.
And, so follow the smart money. Remember I said at the beginning, success leaves clues, right? So follow the smart money, look at what the big boys are doing and do what they do, because even on a small scale, you're going to do well. So
now, what would you sell somebody that wants to get into a Florida, right, and get in there, but they're not as big as the big boys, right? What would you tell them? Would you take a smaller market, smaller type units and property size? Some clues there.
So here's where I find the sweet spots are right now. I think there's two of them. One is under 120 units. So between 20 and 120 units, your competition is less in that market. Okay. We're doing a deal that's 40. I'm sorry, you guys, I've been sick for 2 days. So I think going in and out of the air conditioning has just wiped me out here.
No problem.
But we're doing a 40 unit deal right now.
Okay.
But I've looked at stuff. Sorry. Hang on.
No problem. So you're saying under 120 units, which makes sense because that takes it out of the big boys ball game, right? The big monopoly, the private equity firms that have to place money.
Right.
Okay.
And so the other space that I really like is your value add around 20 units, under 20 units. So we did a 28 unit deal where we bought the deal. We went in and we rehabbed it, and we know that we'll be out of it within 30 months.
Okay.
And that'll be It's a quick flip. We're in and out. We know that, our return's going to be a little bit greater than if it was a long-term hold, but because of the quick flip, it makes sense.
So now are those the flip ones, are you using private equity? You're not doing a syndication model and something like that, right?
We're syndicating everything. Yeah.
Okay. Oh, okay.
Yeah. That's always what I've done is syndicate everything. So we're raising money
Okay.
on deals and doing that. So, yeah.
So your investors, obviously it's a smaller hold for that 20 unit. So they're going to get their money back. Do you mind sharing what are some of the numbers on something like that?
Yeah. So what I try to always target is an 8% cash on cash return and a mid-teens return. That could be somewhere between 17 to 20% IRR. And
Okay.
that's to the investor, and that is whether it's a 3-year or a 7-year. But we're always going to hold the deal. Depending on the deal size, we'll hold that deal 3 years or 7 years.
Okay.
So, like
That's
this 40 unit we'll do for 7 years. The 28 unit we're doing for 3 years. So
you're still finding deals out there. That's awesome deals, at least. So now, how did you find that one? Did you find it through networking or?
So it's all, listen, we're in a relationship business. This is all about relationships. So if you don't know somebody who can introduce you to somebody, go meet somebody who can introduce you to somebody, because this is about relationships. And if I call a broker directly today and they don't know who I am, they're not going to call me back. They're not going to respond to me. But if I drop a name and I say, hey, Pat Gage told me to call you, I'm getting a phone call back. I got a friend. He's been in the space for 20 years. He's a good friend of mine. When I call a broker and say, hey, Forrest told me to call you.
You're going to call him back. Yeah.
I get a call back, so it's a relationship business. And I do that with my coaching clients, right? So for my clients that I open my database up to, because I'm a huge connector, I've always been a connector. I believe because I've always believed this space is relationship based. So if I can, Pat, if you need somebody to do something for you, call me. And if I know them, I'm going to introduce you. Right.
Gotcha. Okay. That makes sense. That makes sense. Okay.
So, because I think that the business that we're in, it's a small space anyhow, but as big as it is, it's a small space. And, the answer about finding your deals, see, once you get on a broker's list and you start getting deals, I have a steady flow of deals. Sometimes I look at my email and I go, oh my gosh, how am I never going to get through this? But, I analyze 2 to 3 deals a day. And then I have an underwriter that once a week, I'll send him a pocket full of stuff to look at, and he analyzes stuff. But I analyzed 3 deals today, and all 3 of them, I was like, I don't even know why I opened this OM up. I didn't like the way the outside looked, or, I think you have to have a buying standard, right? Mm-hmm. And this thing I learned early on. There's certain styles I don't like. I don't like high rises. I don't like flat roofs in different markets. So, so depending on where you're at, you're going to adjust some of your buying style. But, I looked at a deal today. It was an old hotel and with outdoor outdoor balconies. Your in and out entrance was on the front there. And I was like, man, I don't like and I underwrote it thinking, well, maybe this is good. And the numbers were terrible. And I said,
is that what you're finding? Is that what you're finding? Because a lot of times I do the same thing. I underwrite them from brokers, and I get where it's maybe $1 million, $2 million off, and I can't even make it work. Yeah, and it's like you hate the broker back, but it's like, hey, is my math wrong?
Yeah. So here, Pat, too. Here's the other thing, right? So when you're underwriting a deal, most of these deals that come across without a price, right?
Yeah.
So you have to figure out what's that market cap rate, or have some guesstimate at it. Yep. I underwrote a deal in Dallas today, in Tyler, Texas, a suburb of Dallas, right? Really strong Class A deal, built in 2018, really a nice looking deal, 20 some units for $6.5 million. I go, are you kidding me? And I underwrote the thing. And then I took the cash flow and I backed the cap rate into it. And I went, man, there's no way this deal, there's just no return at all, no cash flow, nothing, So I use a tool that's a pretty robust analyzer that we've built over the years. This friend of mine used to work for me. And when he came to work for me, he had this Excel tool and we built it out. And then when I went to prison, he continued to build it out. It's an institutional grade tool.
Okay.
That your insurance companies and your teacher pension funds and your, high net worth family offices will use, because it's very robust.
That's good. Okay.
It's very sensitive and robust. So I use that and I can tell in 15 minutes whether or not, the deal's going to
worth doing. And that's good. I got somebody with their hand raised. Miss Adler. Yeah. Let me hang on one second. I'm going to ask to unmute. This is new for me, so I do apologize. I'm going to ask to unmute, and I think you can unmute yourself.
Yes. Hello.
Hi.
Hi. Pat, thank you so much for organizing this event.
You're welcome.
And Mike, thank you so much for telling the story. And from my side, I really sorry to hear that it didn't go like the whole investment thing the way it was supposed to be. And from my side, for what it's worth, I don't think so it was fair with the whole sentencing thing and stuff. And I'm glad that you're back in the game. And I'd like to ask you advice. I'm trying to sell a building and it's in Dallas for almost 8 cap rate, and I can't sell it. It's a small building, has 4 units, and it's too small for big investors like yourself, but it kind of looks like too big for just
institutional people.
For just people who start investing, right? So basically I'm getting nowhere, even though it's a turnkey investment. And even I speak with people from California and New York, and I have management companies, so I can provide even the management, but somehow it's still not sold.
So it's obvious, it's a residential, it's 4 unit. Are you marketing as residential or as commercial?
A residential.
Yeah. And you have not been able to find somebody as a new investor who wants to come in the multifamily space, and because I would think that type of building would sell all day long. A lot of times I think it's price, is it overpriced? A lot of times one thing I always talk to people about is, hey, don't over improve something. So if you've over improved it where you didn't leave any meat on the bone or any opportunity for somebody to make some money on it, that kind of hampers you also. I always teach, hey, if I have to put $2,500 a unit into a unit in a deal, well, maybe I'll only put $2,000 in. And if I can raise the rents $100, maybe I'll only raise them $75. And that leaves some meat on the bone so that when I go to sell out of the deal, the next buyer says, oh, I have opportunity here. So you have to look at it and say, how do I create opportunity for the next buyer? Is my pricing right? Go ahead.
Well, the pricing is it's a fair price because it does reflect 8 cap rate, while you can potentially get such high cap rates on larger scale. Right now, everything like 6.5 and lower. The building, we didn't over improve it. It's stable. It's basically turnkey investment because not every deal, you get the value add. So this one is for someone who wants to park his money for long term, and it's in opportunity zone. So if you keep it for 10 years, you don't have to pay any capital gains taxes while you'll sell it, which is a nice bonus. And the price for it is $500,000, 4 units. I mean, it's reasonably priced. Can't push it.
Yeah. How about what's the submarket like? You said it's an opportunity zone. Is it pretty tough or?
It's so in Dallas area, South Dallas is the worst, and East Dallas is a little bit better. So this is East Dallas.
Okay. I almost did a deal in East Dallas one time.
Okay.
Yeah. So, send it over to me. I'll look at it and give you my, I actually know a couple people that might have an interest in it in that market. So I can forward it on to them.
Thank you so much. I will do that.
Yeah. So I wish I had a better answer, but.
No, that's fine.
How long have you had it on the market?
I had it for 3 months on LoopNet, and I received more than 300 people inquiries. And what happened is that either people be not serious, like first-time investors. With all due respect, I mean, I want to work with everyone, right? But when people call and say, I would like to buy your building, I'm like, okay, it goes for 8 cap rate. I don't care about cap rates. I just want to buy it. So people they start asking me it's because it's low entry point from, total money value, $500,000 for a building. It's not like a really big buy. So people start all this get quick rich schemes. They think okay, how can I buy it with no down payment? What if I'll tell my bank that I'm going to live in it? And I just got frustrated. I took it off. So right now it floats somewhere on CoStar, but it's nothing concrete.
Do you have it on the residential MLS?
No, I want to sell it myself and save the commission.
Mm-hmm. I'd bite the bullet and put it on the MLS.
Yeah, me too. You get broader range, but you probably get a lot.
It's a residential deal. That's the buyer you're looking for right there.
Okay. So maybe that's the opportunity that I'm missing.
Yeah. And you can I wouldn't do this, but you could probably find a discount broker. I mean, it's not a lot of money. It's 6%, or so.
That bites into my profit.
Well, you can sell it and move on to the next one, and then I mean,
it's a marathon, not a sprint. Yeah. It's not the only deal you're going to do.
So okay, thank you.
Yeah.
You're welcome. Thank you for the question.
Yeah. Hey, so Pat, can I tell the rest of this story?
Yeah, go right ahead, dude. It's your platform.
So it's not, no, thank you though. Hey, so I go to prison and I'm thinking my life is completely over and what am I going to do? So I go from living this middle-class lifestyle. I was, the neighborhood baseball coach, soccer coach, home most nights for dinner, had a great marriage. And I get ripped from that life into, I'm living in a 12 by 12 room with 3 guys I don't know, in a 2 by 5 locker with 3 green outfits, 5 pairs of underpants, wondering what happened to my life. And so I walked around, pretty much every day, like in a daze, didn't know what I was going to do, how I was going to get through this. I didn't know how I was going to get through one day, much less, 8 years of what I was going to experience. And I was in prison about 17 days and my wife decided she was going to divorce me. And at that point, my life really came to a screeching halt. And I had no idea how I was going to get through. So, prison's kind of a funny place, as dark and evil as it can be. There's a lot of people around you circle up and really kind of lift a guy up who's having challenges. And we did it a lot for people and people did it for me. And I was in about 6 weeks and I walk into the gym one day and I just was going to look around. That's all. I was like window shopping, right? And I had gone from running marathons and being in great shape to being 35 pounds overweight. And I walk in the gym and this guy walks over to me and he goes, "Hey, look, man," he goes, "get over it." He goes, "Don't let these people beat you." And he goes, "All they want to do is take everything from you. They can take your real estate. They can take your cars. They can take your business. They can destroy your family. But what they can't take is who you are, what you're made of, what caused you to build those successful businesses, what got you to the place that you were at." He goes, "You can get that all back." He goes, "Come in this gym every day, take my class every day, lose some weight, get in better shape. Best advice anybody ever gave me. So I started going to his class. I started losing weight. I started feeling better, got more energy. I wound up going to college. I got a bachelor's degree in theology. I wrote 2 books. One is called Exit Plan. It's your complete guide to multifamily investing and why you need an exit plan before you buy. I wrote a book on property management. I wrote a couple of home study courses. I wrote an ethics course. I taught real estate investing and property management, ethics in prison. You know, how ironic, right? A federal inmate teaching ethics. I was on an outreach program. I'd go into the community. I told my story 40 times to local businesses and to college students. I met a professor from the University of Minnesota, and we co-authored a paper that this year we had published in the Business Journal of Ethics. And it gets taught at the collegiate level to forensic accounting students and sales and marketing students. So I did a lot with my time. I stayed busy, as busy as I could to make the time go by. I think that, you know, I'll tell you one thing that's been pretty interesting is there's 4 or 5 guys that took some of my classes that are home doing real estate. I've met with some guys here in Chicago that were in my classes that, you know, one guy comes to mind in particular that he learned a bunch of stuff. He's been home doing flips. He's done like 11 deconversions on 2 and 3 units, making them single family houses in specific neighborhoods in the city. And so some of these guys are doing real well. So I really feel like I kind of gave back as much as I learned, I gave back too. And so it was a great experience. So you know, it wasn't all loss. So I always say that my story has a lot of success, complete loss, and then this redemption piece. So
that's awesome. That's awesome. And I would like to pump your book because I did read Exit Plan.
Oh.
And people can go to your website and I'll give you a chance at the end. Did you put your website in the contact?
I did. Yeah, I did. And my link to the link to the book is there too, but it's
please download that because it is a great book. It covers, and you can see the time he put into the book and the thought that he uses in it. So it's definitely, I like I told you this weekend, I don't think I've seen anybody write, you know, when you buy a property, you know, they always want, you know, talk about, okay, we got it under a contract, we're signing. They don't talk about, okay, now you got it. Now what do you do? You know, you got to plan that stuff ahead of time. So you're not stuck with this asset going, oh, that was great. Closing was awesome, but now I got to run the thing, right? Now I got to, you know, execute the business plan. So, but yeah, definitely download that, guys and gals. That's a great read.
Yeah.
Also, what I like to share is also you talked about in the beginning of, you know, seeking out a mentor, and I love that because you hit on a couple key points there. You sought out a mentor that was doing what you wanted to do both times. I believe when you sold your construction company, you met and got somebody there. How do you find a good mentor? Or like somebody coming in is like this, how do we evaluate that? Because I mean, obviously there's so many.
Yeah. You know, I think that it's like anything else. It becomes a question and answer process, right? So I like to look at somebody's success, right? And what have you learned as a result of your success? So, you know, yeah, I grew this great company, but what I learned was don't scale too fast. I grew 138 employees in 30 months.
Wow.
You know, I didn't need all that staff. I hired talent because I knew where we were going as a company and I needed them in place. And I think that you need to be aware of those kind of things and not let them overwhelm you. So ask people, you know, hey, what successes have you had? What failures have you had? What have you learned from it? How do you teach? Is there coaching style or training style one that will match with you? You know, and it's just like when I take on a new coaching client, I want to make sure you're coachable. I don't, you know, when I first started coaching, which is 20 some years ago, I walked away from a table. I wrote a check for $1,000, one-on-one coaching, $1,000 a month. And I did that for 20 years. But when I walked away from that table the first day, I went, oh my God, how am I going to pay for this? So I knew I was coachable, and I knew that if I did what my coach suggested me to do, because a coach is going to suggest, right? A coach isn't going to tell you what to do. But I knew if I did what my coach suggested me to do, that I would be successful. And I watched my business grow 20% a year every year as a result of it. So I think coaching is important for people. So what I want to do, and what I do with people, is we work in a box, right? And that box is those techniques. Hey, how do we build a good team? How do we find and source good deals? How do we underwrite? How do we look at the early evaluation? How do we build an exit plan? How do we look at a CapEx plan? We do all that stuff in a box, but I like to work outside the box, because what I know for a fact is people don't grow professionally until they grow personally. So I'm a big mindset guy. You have to grow personally to grow professionally. We all have a goal. We can have a goal to make $1 million, but who do you have to become along the way? And when you get there, what are you going to do? So I want a coach that's going to help me grow personally. So
Awesome. That's awesome. And obviously, anybody who's interested, please, go to his website, get on a call with him, and that's the reason for doing these calls here. And give Mike's experience a chance. Does anybody have a question? I don't want to dominate the questions here. If anybody else have any questions? All right, Hartford, hang on one second here, man. We'll try to do this the way we're doing it here. All righty.
All right. Yeah, great story. I appreciate all the upfront honesty. Let's have a quick question. You mentioned, I just want to know, do you have a good source of finding market cap rates? Not cap rates specifically for the individual property, but just market cap rates. What I've been doing is I've called appraisers. I try to pick the brains of mortgage lenders and things like that. But I just wondered if there was other ways that we could go about just finding the market cap rates.
So do you have a relationship with any brokers, commercial brokers at a CBRE or Marcus Millichap or?
Yeah, I do. I do have a relationship with one, and they provide me with information. But I also don't want to waste their time, because a lot of times I'm finding these deals with direct mail. Yeah. And, if I don't have the intent to use that broker to get the property, I just don't want to destroy the relationship by just always asking them for that information and never really using them for the deal.
So without paying for data, I think there's some ways that you can do it without paying for data. Go to LoopNet, pull the solds. From the solds, you should be able to tell what the cap rate on deals in a specific submarket sold for. Make sure that you are focused on that submarket. Like when I look in Tampa right now, there's 15 different submarkets. So those price points and rent increases may be different in number 3 than they are in number 7, right? So you have to look at the map, and you can pull that up off of Google Maps and dig into the submarkets. Then when you know the submarkets based on either zip codes or street boundaries, go to LoopNet, look at some of the solds. And with LoopNet, even you can't get all the data unless you pay for it. But pull that data from LoopNet, pull some tax record data, see what prices sold for. You can back into a cap rate. And I'd get 4 or 5 different, cap rates from properties that have sold, and you could come up with a pretty close average. Hey, I usually throw a number at it right now, a 5. I throw a 5 cap at it, and usually I get pretty close. I am, I can get within, 4 or 5% of what the broker is going to tell me on a whisper price when I talk to the broker on a property. So. And I think it comes with time and experience. The more you do it, the more you're gonna know.
Okay, awesome. Do you underwrite deals with no price? Because I know that's kind of the new thing the brokers are doing now is unlisted or market determined. Do you still run those?
Yeah, I'll run them because I can get pretty close. And if I like the deal and the deal seems like it makes sense, I'll call the broker then and ask the broker, hey, I always want to ask the broker who the seller is, why they're selling, what they can tell me about the deal. The broker's always got a story. And once you get them talking, let them talk. And then the last question is, hey, what's the whisper price?
Okay.
So, and I usually find that that's what I was saying. I usually find that I'm pretty close. So
I think that's a good nugget, what you just said, because I think a lot of people call and say, okay, what's the Worcester price? I like what you say. Well, who's the seller? What's the story? Let him talk. And then you slip in the
Yeah.
back because he's probably getting 1,000 calls a day, right?
Right.
I don't. Yep. You're calling from Indiana looking. Okay. So to do it that way, I think is a good way to do it. And the guy starts talking. And then at the end, you kind of, hey, well, what's the whisper price? You've already gotten the story out of the broker,
Yeah.
which is, he's opened up to you. That's interesting.
So, Pat, I always, there's a couple of sayings that I kind of live by. And one is nobody cares what you know until they know how much you care. And it's the same thing about, getting information, right? I don't know if anybody's ever read the book by Dale Carnegie, but, How to Win Friends and Influence People. But he just talks in there about giving to somebody else, continually giving back to someone else. And the more you can give that broker and care about his situation, care about the seller's situation, then they're pretty forthcoming with information. So
Interesting. What one piece of advice would you give somebody right now in this type of market?
Yeah, walk, don't run. I think there's a lot of unanswered questions in the market today. I don't think that we're going to see any real changes for about 18 months. And I think there's uncertainty, and I think the uncertainty is going to build. Eviction moratoriums are coming off. Foreclosure moratoriums are coming off. I have a friend who is one of the largest residential foreclosure attorneys in the country. At his peak, he was doing about 800 foreclosures a month. He represents the Aquins and the Midlands. He represents the servicers of the world. So he closes those foreclosure deals, right? Mm-hmm. And he said, we had dinner a month or so ago, and he said, look, my business is 15% of where it was. He goes, I believe by the end of August, I'll be back at 75%. Now, that was before they kicked the can down the road. This was in July, I think, before they kicked the can down the road another 30 days. But now that they're saying that the end of this month, those are being released. They're not going to kick the can down the road again. So I think that we're going to see some changes, because even the states that had the state moratoriums on this are releasing those too.
So now, with the foreclosure process in a commercial building is a lot different than residential, correct?
Yeah, the fundamentals are the same, but the process is different. It takes a lot longer. Nobody wants to take a commercial building back. I've gone to the bank with keys and dropped keys on the bank president's desk, and he goes, I don't want those. And someone walks out.
Well, I mean, that could be a good marketing need now that all this stuff is coming due and there is no safety net anymore. Is like Hartford was saying, he's direct to seller. That may be something that you want to start pitching in there that, hey, we'll come in and help, not saying that he's in foreclosure, but that could be a good marketing tactic, now that all these, safety nets are gone and they got to get these people out, right? We can't keep them in there, right?
Right.
Stay.
Right.
Interesting.
Yeah. I had a guy, this is funny. This just made me think of this. I had a guy in Alabama, in Huntsville, Alabama. I dropped a set of keys on his desk for a 200-unit apartment deal. And he got up, he walked to the parking lot. I watched him. He got up, he walked to the parking lot, he come back in, he goes, I don't see a car in the parking lot for me. I don't know why you're giving me those keys.
Yeah, what do they go to? Why are you doing this to me?
It was great. He was nuts. I was like, oh God, this is going to be a long day.
Yeah.
So I was able to renegotiate. I did renegotiate that deal though. So
that's good. That's good. And that's really what they want, right? They don't want the buildings back. So it's
right.
Unlike a residential when you have, thousands of people looking for homes, there's very few people that are going to, take on an apartment complex, that can do that. So
Right.
All right, Miss Adler, another question. Go ahead, ma'am.
Yes, thank you.
No problem.
This is like really what you just mentioned about the evictions and moratoriums and foreclosures. This thing really boils my blood. So I don't know, like, how is it even possible in the great United States of America? I mean, people won't pay rent, and the government says, oh, you're the landlord, you can do nothing about it. You have to pick up the bill. They don't tell this to supermarkets. They don't tell it to any service industry. But when it's housing, and I mean, one tenant tried to pull a gun on me over this. And when I called the cops, they said like, wow, you have to leave. It's his property. I'm like, no, this is my property. He's not paying. And under this eviction moratorium, he's just like, I'm not going to pay you. Get off.
Yeah.
And why? Who decided? Is it like even legal to let the property owners carry the cost?
Well,
I mean, how is it?
The government changes the rules all the time. Hey, 5 years before I got indicted, I'd have got slapped on the hand, fined $250,000 by the SEC. The SEC would have said, go back, straighten your business out, don't let it happen again. But when I got indicted, they rip everything apart. They turn everything upside down. They don't want you in business they don't even give you an opportunity. So the government changes the rules every day. I'm not a hater, but I don't know that anybody's got an answer to your question.
Yeah.
To be honest with
you. Understand? It's just not fair. Like, I mean, government decides for private people that, okay, now you're paying for this unknown person who just doesn't want to, wants to sit on his behind all day and doesn't want to go to work,
Hey, I have a friend here. I have a friend here in Chicago. He called me one day and he says, hey, listen, I've got 5 single family homes. He goes, I will discount them 20% if somebody takes them all, and I'll hold the paper. I said, great. I said, tell me about your tenants. He goes, oh, you would be the only guy that asked. He goes, I have 3 of the 5 that haven't paid rent in 10 months.
There you go.
So, that's, so now, for overall, though, I don't think that this whole pandemic thing has been as devastating in the market as people said it was going to be or thought it was going to be early on. I think the people that got hurt the worst were the small operators, obviously people with small buildings, more so than anybody else, because people just said, hey, I'm not paying my rent. I don't have to pay my rent. I don't have to work. The government's going to give me money and I don't have to pay my rent. So,
yeah. It kind of exploited what, they're trying to push through governments now. It's just, what are you going to do? It happens.
Most people, they don't have anything to lose. I mean, they're not holding high-end jobs. They don't really care about their credit score. And even if you try to kind of like collect, there's nowhere to go to collect anything.
Yeah, that's going to be the backlog in the court system that they've been talking about, 18, 20 months later, because even if they open it today, there's such a backlog of stuff coming in. And that's, you're always going to have it, I guess, in any business, right? You just kind of got to mitigate it, see if you can talk to them and, what goes around comes around. I mean, that's kind of what I like to say is, like you said, their credit's going to be damaged, not even thinking that far ahead. So when they do get evicted from yours, they go to the next guy and they say, well, I'm not going to take you because you got evicted or you got this or go, why, what? Well, you should have protected that. So,
So like in June, I was on a conference call where the economist at Marcus and Millichap and the economists from CBRE were on together talking about this. And the consensus was that, by the end of August, when all of this stuff gets released, and that there's, the number I've heard is that there's 10 million foreclosures pending in the banks right now.
Wow.
Now, my friend who's really involved says, I don't think the number's that high, but it's probably, 60% of that number, which is a lot of foreclosures, right? But it won't be anything like it was in 2008. I believe that they've had meetings, closed door meetings, saying, how are we going to handle this? Because this is going to be a bloodbath if we don't handle this correctly. And from the government's perspective, I'm sure that they don't want to see anything happen like happened in 2008 again. But this has been one heck of a bull market. And so what these economists said, that from the end of August, 18 months, which puts us at about the middle of 2023, that's when we're going to really start to see things start to come undone and unwind. So, between now and then, I don't think that you don't do anything. I think you move forward, but you just move forward a little bit more cautiously than you might have a year ago.
Well, like you said, Mike, conservative underwriting, yes, because you can raise it $50 a month, dial it back, do half of that, or, 3/4 of that, just because, that's what the broker is going to sell it on, right? They're salesmen. They're trying to get the highest price possible. Get in there and be, I think we can do this, because if they don't ask the question, your investors are going to ask those questions. Hey, what's your exit plan? What happens if you can't get 75 that you planned on in the market and go only 50? Then that may be reason to say you can't raise money, because they'll ask those kind of questions, and then you're stuck with something you can't do. So
here's another problem I see in the market, right, is that in the residential sector, you remember back, pre-2008, the banks were loaning 125% on a mortgage, right? Mm-hmm. So if your house was only worth 100,000, they'd give you 125. And then what they would do is they'd give you an 80-20 loan. So they give you 80%, and then they'd give you another loan for the 20%. So now you didn't have to come to the table with any money down, and all you had to do was tell them, I make 500,000, and they never checked.
Yeah.
So they gave you that money like that. Well, the problem today is that houses are getting bid up so high. So if the house is worth 100, but somebody's willing to pay 125, and then they say, listen, if it doesn't appraise for the 125, I'll put another 20 in. Now they're $45,000 over market value. So now you're baked in the house again anyhow.
Yeah.
So yeah, I don't see where that makes sense in today's environment. And that's one of the things that scares me. So they're saying that there's a firewall between the residential and the commercial today, but I don't see it. And I don't believe it, because I thought last time that, hey, the residential market's going to get whacked. That's fine. But the commercial market's going to be okay. People are going to need a place to live. Well, everybody moved home with mom and dad.
Yeah.
So that's how the occupancy dropped, right? Either they moved home with mom and dad, or to be like taking this meetup group and half the people moving into the room next to them. All of a sudden your occupancy does this, right? And so that's part of the issue. So just because somebody's willing to pay $100,000 more for a property than you're willing to pay doesn't mean the property's worth $100,000 more.
Yeah.
I just got outbid. I tell people, I say I've been the bridesmaid on 7 deals in the last 8 weeks, because people have outbid me, cash buyer, something like that. But I just lost a deal that somebody came in $250,000 over what I was willing to pay for it. I was a little bit over full price on the deal. It was like $2.7 million, and the deal just barely worked at full price. Just
Wow.
Barely worked. And somebody came in, so if it didn't work for me, how's it going to work for them? So there's a lot of speculation. Don't just over speculate.
Yeah. In fact, a quick story, and I got to wrap up here. But a broker the other day, a property, like 200 unit property. And he said, well, it's not going to cash flow the first year and a half. And I listened to him like, and I said, did I hear that right? He goes, yeah, they're pricing it where you're just like you're talking about, Mike. They're pricing it way above, and to get it done, you'll get a bridge loan because you can't go to Fannie and Freddie Mac. And I'm like, okay, well, there's three signs right there, right? If the government doesn't back it, okay, and you're not going to have cash flow, should you do that? And that's what that's what he's selling it on. And I'm like, well, we're not going to go that high. I'll go high. Here's where I'm at. But you gotta have that kind of, you gotta have that sense. I mean, if the government's not going to back it, my God, it better be one heck of a good play.
Yeah. Yeah.
Interesting. Well, listen, thank you. I'm gonna wrap it up unless somebody else has another question, because
somebody just had something in the chat that said they were looking for information, and I don't know if that was on me and you or contact information.
Can we get information, both you gentlemen? Yes, I posted mine in there, and so is Mike.
Yep.
And here, I'll give you this hint too. When you open up the chat, there's three little dots next to file. Click on those three dots, and then you save the chat. Okay. Have I lost anybody? Click on the three dots, go to save chat, and it'll save the chat. And it said when you click on save chat, another show in folder, click on that, and that'll show you right where it is on your hard drive, and then you can rename it and stuff. So I always do that for people. And any Zoom meeting you go to, you can do that. So that's how you get pull down the information that we've put in there. Okay.
No, listen, there was a question, by government backing, do you mean Section 8 approved? No, that's not what he meant. There's agencies that give loans. So
Freddie and Fannie.
Freddie and Fannie, thank you. And that's what he means. This has nothing to do with Section 8. This is the ability for debt to get a government debt. And there's another problem, right? Is the government owns those agencies today, and nobody really knows who's supposed to own them, but they were privately held for years.
They're pseudo government thing, and I guess after 2008 they were kind of taken over. But hey, see what happens, right? All right. Anybody else got any questions? Doesn't look like I got all the chat here. Well, listen, thank you, Mike. Appreciate it very much. Very grateful for you coming on. It was awesome to meet you this weekend as well. That was awesome. But thank you very much for your time and your patience. And thank you for answering the questions. And please, people, go to his website, download his exit plan book, sign up for his coaching. Gentleman's got a lot of experience and a lot of information that he can share with you.
Let me just give that website again.
Go right ahead.
Somebody said they're not seeing it in the chat. So, but it's there. But you can reach me, and like I said, I'm a huge networker. Mike at mycoreintentions.com, or you can grab a copy of Exit Plan at mycoreintentions.com/exit plan, and you'll get a free download. And let me just say, Pat, I had somebody on my podcast one day. She said, she goes, man, my husband was just yelling at me. I printed your book and it's like 264 pages. She goes, you didn't tell me it was a book. I said, yeah, it's a book. I said, so.
Well, yeah, with the downloadable, people think that's going to be like 20, 30 pages. But yeah, that was. I did the same thing. I'm like, oh my God, I got to print this. So, but I like printing it off because then I can dog-ear it. I can highlight it. Reading it online I'd like to, sit in front of the TV or something to read it. So, but yes, Mike, thank you very much. I appreciate everybody that joined tonight as well. Thank you very much, Mike. I hope you enjoyed it. Thank you. I got a lot out of it. Thank you very much. And we'll see you in 2 weeks. So check the website, opportunitycreator.com/Zoom mastermind meetings for the next one. Next one up is Tate Seymour. He's coming on. And Mike, thank you very much, sir. You enjoy the rest of your evening, and we'll talk to you soon, sir.
You too. Thank you, Pat. Thanks, everybody. Have a great evening.